Hello, everyone, and welcome to the final part of the bear market survival guide, where we're going to be looking at the capitulation event, which is historically the moment where everybody who is going to sell is completely flushed out of the market. It normally represents the absolute lows of that cycle, or at the very least, a significant low from which the market then rallies from that point onwards. Now, of course, looking at capitulation events is quite tricky. We're looking for that moment in time when absolutely everybody is removed from the system. And what it really leaves is only the strong hands that are left. So it's a very interesting dynamic. It's one of these things that we have a number of case studies over time, and we're going to really explore that in some detail in this session. So as I mentioned, a late stage bear market has historically ended with a large scale capitulation event. Now, this is not just Bitcoin. This is actually something that has occurred throughout markets throughout history. After very, very long periods of bear markets, the final investors have just lost all confidence, and generally with one final major sell-off event, all remaining weak hands have purged from the system. Now, this generally represents a transfer of wealth from the weaker handed to the strong handed, but typically speaking, why this is different at the end of a bear market is when even those who have held their coins or held their assets for very long periods of time, even those who you would think are the long-term investors, the strong hands, some portion of those actually capitulate in fear as well. So it really does represent a full and complete washout of anybody who is going to sell. So what we're going to look at in this session is some of the mechanisms that actually drive a capitulation. What actually happens? What do they look like? And what do they, what was the market structure that leads into them? We're going to look at some of the metrics that actually signify that a capitulation has taken place in the past on the Bitcoin ledger. And then as a result of having seen what it looks like before, we're then going to have a look at what tools we can use to actually assess the risk ahead of time. What does the market look like that may signify a capitulation is on the horizon? And then lastly, we're going to look at what it actually looks like coming out of a capitulation event and really looking for that greener grass on the other side of what is historically one of the final lows at the end of a bear market. Now, just before we get started, do give us a comment if you're enjoying this type of content, if you find it useful to understand more about how a bear market works, how different parts of the market structure work. If there's any questions you have, you can always let us know. Do give us a like and a share and a subscribe. It really does help the channel. Let's get started with the analysis. So as I mentioned, what we're looking at is a complete and total flush out of all remaining sellers. So a typical metric that I will go to is the net realized profit and loss. So this is looking at all of the coins that are moving on chain. Some of them realize profits, some of them realize losses. And when we add them all together on a daily basis, what is the net outcome? Now you'll notice for a number of these metrics, I'm going to be using a 7-day or similar exponential moving average. The reason I use the exponential MA is because it puts more weight on what happened yesterday. I care about what happens in more recent history, although I still want to smooth out some of that daily noise. So I typically will use an EMA to get that higher signal in terms of what's happened more recently, but also clear out all the daily oscillations and things that aren't really useful for our analysis. So I've zoomed in here from the January 2018 market top all the way through to 2020, just before our bull run that we've just experienced in 2021 began. And what we can see is that through most of 2018, note how our net realized profit and loss was in a fairly severe state of loss. What we're seeing here is that for an extended period of time, just under a year, almost all of the coins that were moving, with the exception of during the bear market rallies, were essentially realizing net losses. Large amounts of capital were leaving the system. Investors who bought higher up were being flushed out lower and lower and lower. Now, what we can see is that pretty much at the bottom of all of these major sell-off events, notice how our net realized loss spikes. We see this time and time again. And then during the rally higher, we see all of these people who took and actually bought Bitcoin at the bottom, then start to take profits. Now, it's also going to be people who are just waiting for any kind of relief rally. So what this looks like is a general descending pattern in terms of profits, a general ascending pattern in terms of losses. And this really describes this big picture consolidation. People are taking whatever liquidity they can at the top, selling whatever they can in profits, and simultaneously people who are buying those coins thinking that the bull market is back in action are then getting flushed out at the lows. So it's a very, very painful period. People are essentially losing money the entire way through this market structure, as signified by the large amount of overall red. Now, what we can see is that this compressed into a very, very thin triangle just before the November 2018 capitulation. And this is what we really describe here is this massive explosion of large-scale losses. Note how this also persisted for some time. These were generally events. The price came down, spiked, people were flushed out, and then we rallied, and then we had similar again. Whereas this was a sustained period of about 3 months, 4 months of just continuous losses being realized with very, very little profit. And this is really describing what those capitulation events look like. It's a massive flush out of all users. Everybody who is going to sell is selling, but obviously as price trades sideways, somebody was on the other end of that in accumulation mode. Now, we saw another capitulation event here in March 2020. This one was a very, very rapid liquidity event driven heavily by macro environments as the COVID crisis started to break out. And we can see this was a massive overall flush out of network participants. We saw a large amount of losses being realized, much larger, in fact, than what we saw back here in November 2018. And you can see that the magnitude of that flush out resulted in a very large push higher. So it's almost like an equal and opposite reaction in the other direction. Now you can see that we moved back into a period of profits following that. This is a good sign, showed that the market was starting to realize profits and was able to hold on to those gains. And what we started to then move into is a higher likelihood of going back into a bullish trend. So you can see that this really did trigger that final moment of flush out of all remaining sellers. There was simply no sellers left, and then the market was able to push higher from there. So moving across into our current market structure, and we can see we've actually had, here's March 2020, which previously was the largest on our screen, whereas here we are back in May and then again in June, two very, very significant flush out events that we saw following this sell-off that actually eclipsed March 2020. So remember that this particular metric is measuring in USD value. So the higher that Bitcoin's prices are, the more value is in the system. And therefore, for the same coin movement, the same BTC volume, there's going to be larger volume, both in terms of profits and in terms of losses. So that's why we've zoomed into these different market structures separately. So we can see that we've had 2 capitulation events, very, very significant, over $1 billion in net losses in a single day. So it shows how significant that actual flush out was. And you can see that these typically occur precisely at the lows. They can be local lows or global lows, but typically we see these massive spikes in losses at the exact moment when the market starts to reverse. We had another one of these events, not quite as extreme, back here on the 4th of December. And we've had yet another one as we sold down to our current local low of around 33,000. So we have had 1, 2, 3 major capitulation events over the course of the last 12 months. So we can see that this has been in play, and they're also of a magnitude that is much larger than March 2020. So even though it doesn't quite look the same, there's still been a number of these major washout events that flush out all remaining sellers. So now we're going to jump across to the spent output age bands. Again, I have a 7-day moving exponential moving average applied here. Now what this metric looks at, so we've seen that lots of coins were being spent and the amount of losses that they were realizing was significant. So what we're now looking at is how old were those coins. And remember at the start of this session, I said that most of the time a capitulation event is a complete washout. Even the strongest hands get flushed out. So what I have shown here is all the coins age 1 month, 3 to 6 months, 6 to 12, all the way up to our 10-year-old coins. So during a capitulation event, which we can see here at the bottom of all of these major sell-offs, at the bottom of this November 2018 sell-off, in March 2020, and then again during our May and June period, note that we get these large spikes in these older coins. So even people who have held their coins for a very, very long time panic in fear and exit typically at the bottom, which is kind of a very interesting thing to see. We're watching that absolutely everybody has sold, even those who held conviction, have held their coins for multiple years. They think, wow, this must be going lower and I have to exit at any price because I fear it's going to go even lower. That complete and total flush out is typically accentuated by these large spikes in these older coins alongside younger ones. And the way to think about this is that there is no one left to sell following these events. So that really describes why the market is typically able to form an accumulation bottom and then actually start to trend higher. As a result of that, we get these major flush outs and there's simply no one left to sell. Now, another metric that I like to look at is just simply the realized loss metric. And I have applied here a 30-day exponential moving average. Now, I'm here in Workbench. So this is a tool where you can actually combine a number of different metrics. In here, I also have realized profit so I can see how these different functions work and compare them to each other. And we'll talk about this in a little bit of detail. So again, we're here looking at the 2018 into the 2020 market, and you can see here probably a little bit clearer than all of those previous metrics that we have one major capitulation event following the actual top. So let's just put our profits back on. Note that the maximum amount of realized profits occurred at the top, literally people selling the top. The smart money is getting out in a profit. There was too much supply and we entered into a bear market. On that very, very first sell-off, this is when the maximum number of people started to actually get panicked. And we saw that in the spent output age bands that everybody was flushed out at that point in time. It woke everyone up to say, okay, a bear market is now in play. Now you can see that this here, which previously looked quite scary on our previous metrics, isn't quite as severe, especially relative to the first sell-off and then our November 2018 sell-off. So this really did represent that November 2018, a massive flush out after almost a year of really negative price action. So you can see that this really simplifies that overall capitulation style event. Now, we also spoke about how older coins are flushed out as well. And you can actually see, note how realized profits all through the bear declines until we even get realized losses getting flushed out of the, realized profits, flushed out at the bottom at the same time. So note here that at the top of the 2017 market and the 2019 market, it was mostly profits. These are smart money literally selling the top. Where the difference is, if we then go back and look at the November 2018 sell-off, both people in profit and people in loss were flushed out. Again, describing that near complete and total flush out of absolutely everybody who was in profit. And everybody who was in a loss, anyone who was going to be a seller, has now sold. There are no sellers left following such an event. Now, March 2020 is an interesting one because we have a little bit of the same of our 2019 and our 2017, where we have profits actually getting realized that put in this little local top. So there's a bit of a warning sign that the market's starting to get a little bit overheated. People are willing to take profits at smaller and smaller highs. So it signifies that people were getting out before this sell-off happened, and this was predominantly driven by losses as well. Now, the other thing to take away from this, because we saw this is a major capitulation event. We sold down more than 50% over the course of 2 days. But because we didn't have as many of these profitable coins being sold, it signifies there was probably more strength in the market than not. We definitely had our capitulation style event here, and here, but we didn't have that same level of profits being realized, which means that overall, most of the people that were selling were probably some of the weaker hands in the system rather than those with strong conviction. So it does take a little bit of nuance to understand, but really when we're looking at capitulation events, you're looking for major flush outs of everybody who could possibly want to sell is being removed from the system. So let's jump across to our current market structure and really assess where we are. So yet again, we can see that both our November 2018 and our March 2020 capitulation events really disappear in terms of scale. It shows how much value has actually moved into the Bitcoin ecosystem and therefore how much more there is to actually be lost when some of these events happen. Now, this is currently a very, very interesting market structure. We have our May sell-off, which to date is the largest amount of realized losses in a single day. We had over $1 billion loss in a single day, and this actually persisted for about a month and a half. So this is a very, very significant amount of capital flowing out of the system. Many people who were going to sell really did sell from this point onwards, and we'll look at some of the on-chain activity metrics shortly that really describe just the absolute totality of this move. Now we can see here's our December 4th sell-off again, over $800 million worth of losses. And then again up here at $825 million as we actually sold down to the bottom. This was as the conflict with Russia and Ukraine was starting to break out. So there was macro forces that drove this, much the same as our March 2020 COVID crisis bottom. Now, the thing I want to really highlight here is how sustained the losses have been throughout this period. Now, this signifies two things. One, there's a lot more coins changing hand and people are buying and then panic selling throughout this market. You can obviously see that there's less of this during the rally higher and there's more of this as we capitulate lower. But note that we've had a large amount of losses. We've sustained $500 to $800 million per day ever since mid-December. And yet, for the most part, price has more or less traded sideways. We've been in this ranging condition. So that's telling us that people are capitulating, people are selling out their coins, but the market seems to be able to absorb those coins. So we're in this kind of delicate balance that we've been talking about over the last couple of weeks on chain to just try and describe what's going on here. So in terms of the 2021, or at least the last year-long market, we said that our 2018 market was about a year long before that final flush out. Now, we've had a very, very significant flush out here in May, again in June. We've had another one in December, and yet another one as we sold off down here in January. So the market really has had quite some time to flush out those remaining sellers. It doesn't mean that we don't have another capitulation event in the works, but it does mean that a large amount of the sellers who were going to sell have most likely sold. So our risk is somewhat diminished. And this is where we're now going to move into some of the tools we can use to actually assess that risk from a more structural standpoint. So what we're looking at here is the percent of supply in profit. And I've applied just a 30-day moving average here just to really smooth it out so we can look at the bigger picture. Now, there's really two observations when it comes to getting to the end of bear markets. And we're looking at the entirety of Bitcoin's history here. So we can see that during the 2015 bear and again in the 2017 bear, note that as it wears on, more and more supply naturally moves into a loss, which in other words means that the amount of supply and profit continues to decline. Now you can see that as we get to the late stage of the 2015 bear, that our percent supply and profit is down here below 50%. This is saying that more than 50% of all coins are going to be underwater at that point in time, which is quite significant. Likewise, in our 2017 market, we had this severe deterioration in profitability. The market moves into worse and worse conditions until we finally get to the absolute bottom down here, where over 50% of the supply is underwater. Now, we had a similar event here during the 2019 market where we didn't quite get down to 50%, but we still got down to 53%, where a large portion of the market is at a loss. Now, where we are at the moment, we've sold down not to the same level. We're about 68% of the overall market is in loss. But remember, what we are also seeing is that over time, there's a gradual shift higher. Now, why is this? Well, if we think about it, Satoshi's coins, which are down there at zero price, and all of the early miners and all the people who bought in 2015, there are going to be more people whose UTXOs and their supply is going to be held at much cheaper prices. Some of it's lost. Some of it may never move again. Some of it may be truly hodled. So over time, we can somewhat expect this will start to climb, but this also shows us there is still a potential in there. There's still a lot of coins that could very well be sold at a loss. So we've still got some 30-odd% of the supply that's held at a loss, which is a non-trivial sum. So the risk is certainly there. We just need to pay attention to that. If we look at past cycles, we got down below 50% in profit. In March 2020, we got down to about 55%, 53%. Here we are up here at 70 or 68%. It could fall somewhat lower if some of those coins get sold. Now, the other thing to note, and starting to move towards getting into the greener pastures, what does it look like as we come out of one of these capitulation events? Note the strength by which this recovers. 2015, there wasn't a great deal of price support. We were still within the bear market price range, but as we started moving higher, look how much supply suddenly ripped back into profit. 2017 at the lows, look how quickly, this was all trading from 3,500 all the way up to just under 4,000, and we saw an enormous amount of profit move back into profit. What does this mean? Somebody had to sell their coins at the lows, somebody had to buy them, and then if price goes $1 above that purchase price, suddenly we have a large amount of supply move back into the green. So when we see these very vertical and very sharp moves, either up or down, in the number of coins that are in profit, it's showing that coins are reallocated to people at lower prices. We've actually seen a transfer of wealth from the weaker hands to the stronger hands. They've purchased at a lower price level, and therefore when the market rallies, all of those coins go back into the green, and it signifies to us just how much accumulation has taken place. So in terms of risk mitigation, what we really want to see is if we get any kind of major sell-off, or if we start to rally from here in either direction, What we want to see is the recovery have a very, very strong and vertical push up higher of percent supply in profit. It shows that coins were purchased lower and therefore somebody had to step in and buy it. And thus those coins have more or less been taken off the market. And we have to then look for when they get sold to whether that rally gets sold into. And now we're really looking at what does it look like as we come out the other side of a capitulation event? What does the greener pastures look like on the other side? Now, we're going to look at two metrics here, and this is in the on-chain activity space. We want to see the network growing. We want to see more people coming back into the system. We want to see people actually starting to use Bitcoin at a greater rate than they did yesterday. So we're going to look at the active addresses and the total transaction counts, which are two very, very simple models, but really show us what is going on in terms of the overall sentiment on-chain. Now we can see two major flush outs of new users. 2017, the bull market completely reversed. See how we were growing the whole way through the bull and it absolutely collapsed on that first major sell-off. This was a complete flush out and a very, very strong signal that we had now entered into a bear market regime. And we really languished down here for an extended period of time until the final washout here in December. From that point, note how we started to see an increase, even though prices were at very low levels, much lower than the bear market, down 50%. Yet we saw growing usage of the network, which then spawned the 2019 market. We found a higher plateau, even though again, prices corrected. We had March 2020, and then we had yet another growth. So in terms of confirmation that maybe the tides are starting to turn, this complete flush out and then a recovery, even though prices may be down, a recovery of network activity is a good sign that the network is in better health than it was yesterday. It's showing more people are coming in, more interest is in the system, and it's generally a nice way to signify, alongside more coins going into profit, that we have a much healthier system. Now you can see much the same in that May sell-off. Again, we saw how big this capitulation event was. It remains the all-time high of realized losses, a major flush out. Here was the bull market paradigm and a complete flush out that actually took us back down to 2019 levels. Shows how severe that was. And we then had our next rally all through up to the all-time high in November, slight recovery, much like 2019, where we found a new higher plateau. Now, bear in mind that we haven't yet had some kind of capitulation event somewhat like March 2020, even though the market structure is similar. So that risk absolutely remains in the system. It's something to just plan for, be prepared for, just in case. What we would like to see at some point, whether it is before, after, or if we don't even have this final flush out event, we're looking for that recovery. We want to see more people coming in. We want to see the interest in Bitcoin growing and that being visible on chain. So that's a signal that we can pay attention to in the near term. Do we start to get a recovery? Do we just have this stable base forming? This is something to really be paying attention to as we come out the other side of whatever the future holds. And lastly, we're going to describe this in terms of the number of transactions, which again is very similar in terms of what we're looking at. We can see the absolute decimation of the market following the 2017 peak. A massive amount of transaction volume was flushed out of the system. It was growing up until our November 2018, and then it really exploded into the 2019 peak. So again, when we combine the number of transactions alongside active addresses, we can really confirm whether we have users coming back into the system and more people are using it. March 2020, again, a major flush out of transaction activity followed by growth. So this is what we want to be looking for, that major recovery. We've seen our major flush out here in the March from the May high all the way through to July. Note how July at the absolute bottom was the low in terms of transaction activity, and we've been on the ascent since. So what we're looking for is something alongside a growth higher. We can see that we've formed this stable plateau, but we do want to see that next leg of growth, both in active addresses, transaction counts, and what we need to pay attention to is that going to happen with a capitulation event, or have we already exhausted all of the sellers? This is the question that remains ahead of us. Nobody has the answer to it, but we can certainly be paying attention to these metrics to try and understand what the likelihood is and whether it has happened or not. So thanks for tuning in for this session, folks. Please give us a like and a subscribe if you enjoyed this content. Really, the capitulation event is a challenging one to identify. It's not an easy thing to spot in advance, but what we can look for is particularly those realized profits starting to pick up in a big way just prior to the event. So that kind of tells us that some of those older hands may be losing conviction. The other thing we're looking for is a large realized loss on the event to show that absolutely everybody who was going to sell has now been completely flushed out. Now, in terms of waiting for that recovery, if you want that confirmation for when the market's starting to pick back up after whatever it is has to happen, that's what we're looking at, the overall supply and profit. Are we seeing more coins come back into profitability alongside growing active addresses and alongside growing transaction activity? So that shows that more people are coming in, the network can absorb more profits, and overall people are in a better health in terms of their overall investment portfolio. So thanks for tuning in, and I look forward to seeing you next week for the Week on Chain. Cheers.